A big round of applause for the panelists. We'd like to start the panel discussion. From here, we'd like to ask Mr. Aritomo to facilitate from FinCity.Tokyo. He's co-founder of FinCity.Tokyo. I have a lot of material, so I'd like to refer to the handout. The title is Can We Transform Punycorns into Unicorns in Tokyo, Japan? It's a rather provocative title, the punycorn. This word, what does this word mean? Recently, when we talk about Japanese investment environment, this word is often used. Puny means it's tiny. Oh, it's tinier. Puny is tinier than tiny, and so it's a puny unicorn that is being referred to here. This is from Financial Times, written by a report, and he talked about Japan being a country where there are too many puny corns, and so we became rather infamous throughout the world for this. And so from diverse angles, we wish to look at this issue, and that's the theme of the session. We'd like to have each speaker introduce themselves. We'd like to hear different perspectives. We have head of the Investment Association and Sumitomo Mitsui's asset management CEO. Among the major asset companies, we have mainly fund managers. This is quite unusual in Japan. And it's unusual that there's a holder of CFA. Chunmei-san is an institutional investor, a large asset manager, and also she also has experience in business, and also has been engaged in impact investment and operating VCs. And Degawa-san has been doing many things. He's president of the Japan CFO Society of Japan, and growth investment is what he's doing considerably recently, and private asset democratization, supporting fintech companies are what he is promoting. Asakura-san is the only person who's up on stage for the second time today. Unlisted and listed companies management venture capitalist, and that's who he is, and he's very famous on social media, and he is very unique. He's a serial entrepreneur, and he was also a jockey of horse racing. And so we have these extraordinary speakers on stage. So from various perspectives, we'd like to discuss the issue, to share the facts. Last year, I went to Toronto in Canada, and in the Japanese consulate in Toronto, we had a discussion with large pension funds. They were invited, and when we invited the pension funds, to our surprise, quite a large number assembled. Canada is a big country, and so there are some who came from Montreal. And I was very surprised that they were willing to come. And what were we told? I have in small print indicated what was said. And there are different things. If we could start with the yellow portion. Are you trying to wind down from China? And but then we don't want to reduce allocation. And so, which is the market that could absorb the position of China? That is only Japan and India. But the Indians are much more aggressive. So we tend to forget about Japan because Indians are very aggressive. And if you look at the left toward the center, the Japanese FIEA is hard to understand. There's an English translation, but it's still hard to understand. The financial instruments exchange businesses, what are they? Financial exchange businesses operators. That's what they are in English. In terms of grammar, it may be correct, but it's still not understandable. The meaning is not very clear. It sounds like English, but it's a lot of these words are not understandable, and there's about 2,000 pages of that, and so they said it was not understandable. And the very bottom on the left, that's an important point. A private investment, when in making investments into venture, the ticket size is 50 million US dollars. That's over 7.5 billion. In excess of that, it could be a bought out client, and so the ticket size is not worth it. They want to invest, but they don't want to invest in punycorns. And then there's a nanocap, microcap, but it's not even these. On the bottom right, worldwide, geopolitically, as Mr. Nakaso's and Mr. Nakato's dialogue showed, worldwide it's unstable, and politically Japan is the only stable country, and it's the only country in which democracy is being maintained in Japan. So in terms of supply chain, they want to increase integration with Japan, but the investment chain they want to integrate as well. But they don't know how to inject money. And if you look at the bottom right, Japanese investment businesses, the limited liability companies, it's hard to understand. METI only has the explanation in Japanese, and it's from Japan Gap, and it's based on accounting, booking accounting, and so if they inject investment, it becomes a permanent establishment, and they are imposed corporate tax, and so they say it's hard to inject money. And in the session where Takada-san moderated, in related to the climate, technology seems to be very advanced in Japan, so it's attractive. But how to monetize is hard to figure out. It's interesting, they say, but they feel that they cannot make much money out of this. So I'd like to pause here. And so I struggled as to how to answer these questions. So I was hoping if you could give us hints one by one. Kishida-san, please.
Thank you very much. Before responding to your question, this panel. So I have participated in many panels moderated by Aritomo-san, and I think it's Aritomo-san's policy that there is no pre-meeting prior to the panelists, not at all. The evidence is nobody, and none of the panelists have notes or other materials, and we don't know how to proceed. And 20 minutes ago, we met and received some guidance. And in that sense, you may feel that each of us is going to a different direction. But anyway, it's going to be a very lively panel discussion. I would like you to enjoy that. So with open mind, I would like to say whatever may come up in my mind. I think Aritomo-san touched upon various points, but I have no idea what Aritomo-san is expecting, because we didn't have a meeting prior to this. But anyway, I would like to talk today based upon my experience of having invested in listed companies for many, many years. So I have been watching public market for many years, and private investors' requests and issues, and not only in Japan, but private and public markets are so very segregated, inclusive of participating investors. systems are changing, but there is still this segregation or segmentation, and we have focused our attention only on the public market, and crossover was touched upon. So private at an early stage, we should make a co-investment, and when the company becomes a public one, we should maintain a long-term relationship. If that is carried out, I think at least some of the problems or the issues pointed out by overseas investors will be solved. So that is one thing we should attempt to do.
Thank you very much. I'm originally a jazz musician, so I think of this as a sort of a jazz session. Chunmei-san, you also have an experience in the public and private, and the Japanese ecosystem is fragmented indeed. The community is pretty much fragmented. And so inclusive of this fact, there are many cases where communication is difficult. Having said that, if you meet with the Canadians, what would you tell them? Chunmei from Impact Capital. We have such a high level group of speakers today. I'm very honored. Rather than public, basically, I am working on the private side. Impact Capital, I'm operating, investing an investment fund at the Shinsei Bank. Private equity investment is what I'm doing, starting from buyout and partially. I'm looking at Shinsei Bank's listed investment, and Shinsei Bank is making LP investments in many investments, and so as a fund management, I'm a manager, and I'm also on the side of investment. As Hishida-san mentioned. If you are in private equity investment for a long time, for the most part, what they say is that once you list, you cannot take market risk. So the VCs would be sold on the market. On the other hand, listed equity investment fund managers are not able to see the private equity sector, so there's no contact point. But now we are seeing a lot of crossover funds. Another issue is that we seize as opportunities is that the potential of VCs and investors, I believe, should undergo change. If you stand on the shoes of VCs, I don't know to what extent you know this investment. In addition to economic return, you wish to see economic, social return as well. So the buy-oriented investors should look at the social side and look at the investment, and so they have to analyze the stakeholders, and you could achieve growth, and you could collect a lot of capable human resources. A long-term investment can be pursued, and so on the side of investors, impact investment funds are on the increase. I don't know to what extent you are knowledgeable about this. At Shinsei Bank, we started the first impact fund as a Japanese bank in 2017. And every year we had the GSC Global Impact Investment, which we have pursued. And we're doing research on market issues and challenges. 2016, there was only 30 billion yen. And the most recent data is from 2023. That's 11.5 trillion yen. In 7 years, there was such a large growth, 700-fold. And the growth is in the loan portion, and listed equity side, the fund managers are on the increase. In December, a company called Yukaria listed, and unusually Cornerstone Impact Investment, the three companies of impact investment is their cornerstones. So at a prior stage, if they could work together and work along from there, I believe this would be something that would lead to major IPOs.
So If you could be brief, I would appreciate it. For overseas LP investors are rather skeptical about Japan, but do you have any words of encouragement? So VC, I'm in charge of VC, and the VC, the purpose is to solve social issues. Like there are many startups that are focusing their efforts on solving such social issues as declining birth rate. And I think they can be very interesting investments.
Could you show the previous chart once again? The clicker is not working. Canadian pension funds. They're skeptical about Japan. And as you say, do you agree with this? Or do you feel that what they're saying is half right but half not correct? Up until now, I'm on the public side, originally from the public side, close to 30 years. A fund manager and management is what I've been doing. In the past 3 or 4 years, private the sector, the private side is most of my work now. And so the public security fund manager, when I was in that capacity, what the Canadian participants said, these are highest level investors in the world. They are very high capacity, and of course in the United States there are such high level professionals, and so from the stand of fund managers, the fee is very high, and so I believe they thought of these as wonderful customers, but they have to generate a commensurate return, and these are true professionals. And among the comments that are shown here, I agree with some. The ticket size does not meet their interest. Canadian dollars, 50 million. Is it U.S. dollars? Is it U.S. dollars? 7.5 billion yen. And I believe what they say is very true. I help out many clients, and the ticket size is when an investor invests in Japanese corporates. Unlisted investment ticket size is a one-shot $15 billion. Unless they have that number, it's not worth it. The venture capitals and the growth equity, between the two, the world is different. In the case of Japan, the issue is there's no bridge between the two. So companies start out small as a venture. That's fine. But in terms of market cap, they go up to 10, 20 billion, 30 billion. There are no players there. And in Japan, if you look to see if there are no such projects, cases, in the manufacturing sector, there's basic elemental technology, and so you have to have a lot of that to have things function. A lot of unlisted companies have treasures, a lot of treasures, but the difficulty is that the shareholders are those who launch the company. It's very difficult to persuade them. They have a very conservative background. And the younger business owners are very proactive, and they take a lot of money, and they're confident about generating returns. We have opportunities here in Japan, but it's not materializing. So we have to fill the gap. There has to be a mechanism to fill the gap. And if there is such a mechanism, I believe there's ample opportunities for there to be success in Japan. And so in that sense, I believe that people are eyeing Japan with much interest.
Asakura-san, what do you think? So I'm operating a VC named Animal Spirit. So I was engaged in startup management. So I may get a lot of harsh questions today, but in the past I invested in a growth capital, small IPO, and IPO is the goal. Those are the phrases we often hear. But since 10 years ago, when the company became listed, market cap was 1.8 billion yen, and small IP, people said that small IPOs are not good. But after becoming public, a certain size of IPO would be more desirable. That is what I have been thinking. And what we did was, by the end of the day, in Japan, when the company is unlisted, even if the company tries to fund several tens of billions of yen, it will be very difficult. And ambition of entrepreneurs may not be strong enough, some people may say, but several billions of yen or several tens of billions of yen should be raised for those companies. With that spirit, I was operating growth capital. And the investors often say that there are too many small IPOs, and even when the companies become listed, they don't grow. So it's like trash shares, and such trash or garbage companies should not become listed. So they were very direct in expressing their opinions. But so opinions, to some extent, I agree with them. And the criteria for becoming listed should be raised, according to some people. And TSE's reports, probably that is going to happen, I would assume. But from a startup point of view, like I'm on startup side, if a criteria for becoming listed is raised, then animal spirits of startups will be eradicated. So it's kind of trade-off. I mean, the investors don't want to see the market being disrupted, but from startups' perspectives, if the criteria are raised, there will be no or very few startups becoming listed. So for whom market exists. So my belief is the main character is the company, and the investors should remain behind the scene. So instead of denying small IPOs, probably the options should be broadened. I mean, it can be large or small. So providing choices should be good. And if the company doesn't grow after becoming listed, should exit. That is the right way.
On the other hand, for us to go overseas to talk meant that we want to have capital from overseas. Otherwise, scalability would not happen. So if we confirm the status in Japan, there are 3,950 listed companies. The chart on the left, as you can see, internationally speaking, 2/3 of the number are micro-cap companies. So oftentimes people refer to these companies as nano-caps. In terms of market cap, that's 3% of the whole. Only 3% of the whole. On the other hand, the top 3% plus are large cap. And overseas investors are interested in these companies. And so that's the makeup. In terms of market cap, they account for 2/3. That's the reality. So it's quite a distorted market. It looks like it in any case. And oftentimes there are misconceptions. When I go overseas, they say the TSC's primary market is that large cap. They ask us that. And the standard is mid cap. Growth is a small cap. That's the question I get, but that's not the case. Even prime is such that 3/4 are small or micro cap, and that's quite well known. And also last year, share prices were quite high. Nikkei average renewed its record. So Japan is seeing a growth trend finally. But if you look at the growth at 250, they also renewed the bottom pricing as the top pricing has gone up. And so a lot of companies are graduating, but then there are a lot of companies that are not graduating. So if we cannot be happy just looking at the Nikkei average. And if we look at the next page, from the overseas investors, this is something that's obvious, but Japanese investors have not noticed. In terms of spot rate in US dollars, we haven't renewed the record. The Nikkei average did not renew the record. In 2021, in January, the record was renewed. I tried to search for the news, and none of the news mentioned the fact that the record was broken. And in 11 prefectures, there was an emergency situation with regard to COVID, and the large amount of snowfall is talked to. And so it's quite long ago that this happened. But we were renewing the record price during this time. And this is viewed from overseas investors. Japanese news media are not really talking about the price increase in equity prices in a meaningful way. And there are heated discussions overseas. And social media, there's a lot of discussion. And Mr. Asakura is one of the opinion leaders. This is, I believe, in a way, very healthy and sound that these things are mentioned. There's a lot of position talk. And when we look at what people are saying, there's too many things, and perhaps it's too busy and you're unable to read. And people say punycorns are fine to be fixated on listed companies, or to, as in the United States, to create a pink sheet. Over-the-counter transactions that would be fine. At the TSE, there's a pro market, so that's fine. But securities companies and VCs are, after all, in the business of having retail customers buy trash stocks. And because of the system that we have in Japan, overseas investors find it hard to understand the system here. The turnover to be increased, that cannot be increased through the shock therapy, or it's meaningless to increase turnover. Maybe some of these companies should be made to withdraw. LPS is a system which is very hard to understand, some say, but you have Cayman, so that's fine. Why do you have to help Cayman make money? These are views that are expressed, and there's a lot of views being expressed. But if we step back a bit and rationally look at what the situation is, could I ask each of the panelists to comment? Objectively speaking, what do you think of, what is your take on this discussion which is taking place? Hishida-san.
Thank you. So, lots of things are written. For example, I personally want to discuss the shareholder returns. Or, as Asakura-san said, lots of discussions are going on with regards to the criteria for letting the companies listed. But I don't think that the criteria should be made more stringent. So I don't agree with it. But on the other hand, the criteria for maintaining the status of being listed should be revisited. But it's not a good idea to regulate it by regulations in the U.S. For example, in 1990s, the listed companies, the number of listed companies have become halved since 1990s. And corporate behaviors have been changing. They are paying more attention to the capital efficiency, and the private market has become broadened. Lots of things are happening. So instead of focusing on one thing, we should discuss various elements simultaneously. And 1990s in the U.S., when there was a major change, I was fund manager. Therefore, I witnessed changes in the U.S. and I spoke with investors. So I was one of the few Japanese people who are interested. So they talked about many things. For example, some companies became listed on Nasdaq, and many of them remained on Nasdaq for a long time. But when it moves to NYSE, it became double digits, 3 digits, or 4 digits, or the ticker. If it becomes 3 digits or 4 digits, then the people think that the company, there's no more room for the company to grow. So super big companies. I spoke with a CFO of a very major company, but back then it was only year 10 after establishment, and this person said the same thing. This type of thinking, I think, is still lacking in us. So the growth market, so the growth companies, when they become big, they sort of graduate, and it's a destiny, it's a fate. But that type of thinking we should stop. So the growth companies, the growth potential can be brand for some companies. So changing the method. So we should change our perception, and the companies that grow. The ticker, 4-digit ticker, maybe a fashion. I mean, if we are able to say that, I think the what we see will be different, totally different.
Thank you. Maybe we could ask Sakura-san. He is the party concerned, so could you comment in 2 or 3 minutes about what is written here? I believe the discussion points are very much mixed and concerned. There are small listed companies. Some say that's not good. The new IPO are by companies that are too small, and that's the problem. Companies list on the prime if they're big enough, so they skip the growth. And so I essentially don't think this is right. But TS Prime is the first group, and the growth is the third group. And so companies are encouraged to try to move to the prime market. And so when you look at this, large companies first go to TSE Prime. The TSE growth small companies, that's fine. These are companies that have potential to become big. I think that's what it is. So it's not meaningful to talk much about the TSE growth market. If you look at TSE Prime, there are 1,600 companies, and there are 20 companies that have not exceeded 10 billion, and there are those that have not completed 30 billion. There are 500 companies that have not exceeded 60 million. So 60 billion. So Canadian companies would not invest in growth. They would invest in Prime, and companies in Prime are those in topics. These are emblematic companies of Japan, and so if these are under 30 billion, 10 billion, that's not good. Maybe we should make these companies delist. You should have some criteria. But talking about the TSA growth market being small is not hitting the mark. I believe it's a meaningless discussion. Any suggestions as to what things could be done to improve things?
So I don't know if the examples in the U.S. apply to Japan, but compared with the listed companies in the U.S., the companies in which funds invest, there are 6 times more the private equity. So the good companies, excellent companies can grow, and they don't have to think really about becoming public. In Japan, there may not be enough number of investors who would invest in that kind of companies, but the situation is very different outside Japan. But active managers are really active. I mean, they don't, once they hold some names, they don't just stand still, but try to change management or the proposed mergers and acquisitions. And so in order for Japanese companies to grow and become big, the companies should not stay in this limited-sized market, but they should enter into the global market.
Chunmei-san, in 2 or 3 minutes, please. I am investing in VCs. So small IPOs are an issue. So last year, 86 companies have listed, and the average is about the 9 billion yen. Growth is 8.3 billion yen. From the VC fund managers, it should be 2 to 3 times. It should be over. We cannot invest in companies that exceed 2 billion, 3 billion. Startups are 70% IPOs, and so we tend to depend on that. Investors, institutional investors invest only when there is 20 billion, 30 billion. So there's a bottleneck here. So IPOs are conducted for different reasons. If maybe there's a clue here, maybe 2 or 3 clues in leads I can give. The IPO companies wait until they become bigger. And non-continuous growth, a startup M&A, there's an M&A that they could consider. And the other is a lot of references made to crossover. They're only looking at 30 to 50 billion. If they're impact-oriented, the Japanese unique world, when they look at this social issues times DX, this is very unique in Japan. And if by coming into contact this, taking a medium-term to a long-term perspective, perhaps they can see a good timing to take action. I think if they could do that, it would be very good.
We have about 10 minutes left. So if I may share with you some facts. So comparing with the US, in Japan, the 3% represent the 65% of the market cap. But right now, 60 trillion in total, the market cap amounts to a top 7, significant 7, 15 trillion, around 15 trillion. So a quarter of them, the top 7 or a magnificent 7 accounts for a quarter of the total. But in terms of the size of the market, a market cap is 8 times larger, and GDP is 6 times larger. So GDP is 6 times larger, but the market cap is 8 times larger. Isn't it odd? And the number of companies is about 3,900, not so different. So it doesn't make much sense to increase the number of listed companies. And S&P 500, a magnificent 7, GAFA, NVIDIA, and Tesla. So 34.6%. And whether that is meaningful is another question. And I would like each one to say last words. What is your expectation for FinCity.Tokyo? So this Bali, after becoming listed, the share price may fall, and how we can depart from that situation. Unless we successfully solve that problem, the Japanese economy will not grow. So one measure is emerging managers program that we heard this morning. So emerging managers may invest in those companies with a big potentiality. Another thing is disclosure assistance, particularly ESG and sustainability related. So the companies may be too small to have a good communication. So English language investment support we are providing. And, but still, their share prices, even though the support has been extended, their share prices have not risen. So I would like each panelist to speak for up to 2 minutes. So what is your expectation for FinCity.Tokyo? What would you like FinCity.Tokyo to do or not do, starting with Asakura-san?
Starting with Asakura-san, activist funds targeting growth funds. So I wish to see more of these. When I was managing my own company and when I was outside director, the outside director role is in-house activist. So I get into a lot of fights with these companies, and then it was a lot of fights. But the Mitsui grew from 15 billion to 500 billion. So if there's decent managers, if they try hard, they will achieve. But the incentives are very difficult, so it's more easier said than done. So these traditional companies to be targeted is good, but if investors would look at growth companies and in more investors, that would be activist. And I think there is some room for growth if this happens.
Well, I don't know whether FinCity can be created in Tokyo, but many asset owners, I mean, Tokyo Metropolitan Government has one as well. That is a pension for Tokyo Metropolitan Government staffs. And there are larger public pension funds as well. Emerging managers, this segment. So the cornershore type investors, they can be, and 1% to 0.5%. Even 0.5% can be a large amount of money, and they should become a cornershore type investors, focusing their resources on the potential. The companies have a big potential. That can be interesting.
I will continue to negotiate. Chunmei-san, thank you. You've taken the perspective, all have taken the perspective of investors, but I'd like to focus on the startups. Iteration is important, and there are many overseas companies that are listed. If they meet with the fund managers, they can draw a broader picture of their investment strategies. And in Japan, they have universal health care in Japan, and so by having more of an understanding of this, it would be a driver for the growth story. So I don't know whether this can be done post-listing large fund managers to create opportunities for these fund managers meet with startups. And I believe if there's a lot more communication from the Japanese side, it would be good.
This graph shows exactly that. The VC, the early phase and grow. So investors who can run right next to the companies, so the very long horizon. It's segregated because investors exit in the middle, but investors, what we would like to see is the long horizon investors. And the FinCity.Tokyo. If FinCity.Tokyo can create a hub for that type of investors, it will be ideal. One of the industries or some industries should work together in order to enable that. Thank you.
Thank you. We have been given some homework to do. Asakura-san has said, we showcased emerging managers, and Asakura-san was up on stage. Microcap investment. There are not many fund managers specializing in that. We'll work harder to find them, and we'd like to support them. And as Degawa-san has said, that's TMG is co-sponsoring, and we have to also draw in a lot of local associations. Corporate pension reform, whether it's public or quasi-public, we need to exercise reform. And growth on the growth market, or if we could leverage emerging managers to inject funds. Overseas LPs and domestic emerging managers, we're trying to bring them together. We need to work on the domestic LPs. And as Chunmei-san has said, we look at attractive companies which we can target as for investment. there are some strange things here. Heatflation and so forth. There are different potential investees, and so we'd like to continue to communicate about these companies, even though they might be small. And Hishida-san has commented to the effect that there is no panacea, so we have to try various things to communicate both domestically and internationally about the present status, so that somehow we can improve the ecosystem. And I think a continuation is the only approach. I felt. So we'd like to thank the four panelists for their very valuable views. And if you have comments, please contact the FinCity Secretariat. Thank you very much. We've finished on time. Thank you.
皆様ありがとうございました。どうぞ大きな拍手でお送りください。
Thank you very much. Can we have a big round of applause to all of the panelists and the moderator?